Hey, what's up? If you're new, welcome. If you're not, welcome back. So, this basically is gonna be the next step in my journal, and then I'll show you as well what I traded today, what it looked like on the platform, and then we go from there. See if I can give you some value while also putting in some practice for myself. So, if you watch any of the previous videos, you know I mainly try to trade the Nasdaq 100, which is the QQQ on the stock market. I try to chart it up, um, try to draw the key support and resistant lines on a larger time frame, and then during the days I go down and then try to trade it on like 5 minute, 15 minute, smaller time frames. Okay. So I'm gonna show you just today because the other videos have those respective days. So this is today. All right, and then I have also the platform, and I only took 2 trades today, and that's it. I just kept it simple. I stuck to the rules. Took 2 trades. When I got some good profit, I exited. I could have made more profit, coulda, shoulda, woulda, but that doesn't even matter. Like, I stuck to my plan. I'm building out the system. I'm just hoping to just scale that more once I've mastered it a lot more. So as you know, it starts from top down for some reason, and then remember it's British time, so that's 5 hour difference. Okay, so I entered this trade at 9:48, right? And I have it on my phone, so I can also tell you exactly what I was doing. So at 9:48, that would be my first trade. That's a market order 26754, right? Okay, that's a market sell 26754, 30 shares. And then at 10:09, another market order at 26802, that's 30 shares. And then at yeah, let me go over those first. So these were the market orders: 26754, 26802, and that is, let's look for 9:48 now. 9:48 would be around probably here about. Yeah, 9:48 would be somewhere around here. So if you seen previous videos of mine, you know I kind of look for these. This kind of shows that it's pushing down the market. Buyers are kind of weak, and then the sellers come and push it right down. This is like a candlestick pattern. So remember, I'm trying to read the candlesticks better, have a better understanding of technicals, because understanding the charts and the technicals can probably give you some insight into what the broader market is thinking, what's the psychology of the market in the moment. That's what traders tend to try to anticipate and gather knowledge from when they're looking at the chart. So I'm showing you that I entered at 9:48 here on this week. So I'm saying, okay. And also, let me point out something very important. This is because I've traded stocks a lot, so I know that I know, or I'm used to certain things playing out this way. So this is yesterday, right? Yesterday at 3:55. That's Tuesday. Yesterday at 3:55. This is where you closed, and then we had a big gap down, and this was the open today, right? So you open today with a gap down. When I see a gap down, it's like, okay, the market decides where it decided its direction already. Some people made a move, and then some other players might buy it up and try to fill the gap, and then it generally pushes down. It's a good thing it didn't come all the way up here. I had a stop loss around here, and they could have hit me out, but they didn't. It came up here, it didn't form a new high. It just kind of played with this level and then came back down. This is like a lower high, and then that's where it came back down. So let's show you. So I entered 26754, right? At 948. 948. So that's around here. So I saw this week I entered here, market 30 shares, right? And then 1009. So let's go to 1010 and see what it was doing. 1010, right? So 1010, I 1009, yeah. 1009, I entered around probably here. I'm saying, okay, this is the top, let me write it down, and then 1034, what time, what was happening 1034? 1034 is, I would say, around here. So this is where it passed like this key level. It finally broke this level, and I'm thinking, okay, we're gonna continue down. Oh, I'm gonna continue down, right? So I'm thinking, all right. So remember, I have a trade entered at 948, which is around here, and then I have a trade at 1009. 1009. 1009 is bias. Yeah, 1009 would be somewhere around here. So I entered here for the short side again, and then 1034. 1034. See the magic opening up here. So I would say it's about around here. Around here, I would have said I entered 1034, 26610. Oh no, 26610. Let's get it right. 26610. Is that where I got in at? Yeah, 26610. So I got in around here, and this is where I'm thinking, okay, we got a push down. Let me enter here to continue down, right? Some of these trades got closed, as in all of these trades got closed at around 103.46. Let's find 103. So around 103. So around, yeah, somewhere around here. So top to bottom, somewhere around here, 103, 265, 88, 265, 88. Yeah, around here. So I exited around 26588 at 103. So it's between these candles, one of these specific candles. Let me pull that back up. 26588 at 103. 26588. I could even get up a line here. So 26588. 88. Move up a point. Come on. Yeah, bam. 26588. And that's where I exited. 26588. Yeah. So around here is where I exited 103. So chances are I saw this candle and I'm like, okay, maybe the sellers are exhausted, looking to push up. I don't want to just give back the market all of my profits. I'm all set. I won't be a greedy guy. And that's where I just pulled out how much? $123. $123 overall, but then there were fees for just opening the trade. And then I had a sell stop. So a sell stop is when basically I set the order, I have the plan, I'm saying, okay, if it hits this level, open a sell position for me. And if I'm away, you just automatically do that. So at 130, let's check out 130 now. 130 is around here. Yeah. 130 is around there. So at that time, basically I was looking at this week, this week, this week, and I'm thinking, okay, if you decide to break down here with strength, I'll take it, right? So we had a, what's that? 26508. 26508. Ah, look at it good. 26509. So I'm thinking, okay, if you really feel strong, I will take it. 26508 is just a little bit underneath this. And I'm thinking, if you are able to clear these candles with some strength, you're going more down, right? And then I'm thinking, let's see, what price did I exited at? 26414 at 139. 26414 at 139. 26414. 26414. Wow. So let's get. Let me even show you that one. 2641. Wow. Ooh. It's around there. 26, because that's 26415, right? So 26414. Come on. Right there. Right there. Come on. Why are you skipping 14, bro? What the hell? Come on. Hmm? Alright. Alright. Just around there, 26414. And that was a trade at 139. So say 140. This is 140. Yeah. So right around there, I exited that trade for 50. So you could see I entered at 26508, which is right around here, and then exited right around there, which is just another level of support. And I didn't want to allow it to come up and clear out my, because you see it came right back up to 26509, and then there I would be either zero or a little bit negative. I said, okay, I'll take the profit right down here. We hit a key support, and I wasn't sure if it's gonna rally right back up, and I'm not willing to take the chance, so I just exited with the profits there. So on the day, what's this, like $150, and then that was basically from, what's this, 130 to 139, and 948 to 1009, and 1034 to 103. But these are all one position, like a scaling, and then this is where I sold out the entire position for $123 profit. So that's basically the technical. So I'm seeing something like on the 5 hour, on the 5 minute, you can actually break it down, look into it, and you can see, okay, the market literally is not forming new highs or new lows, or it's not forming the patterns with strength, and then you can just pick the other direction unless it zigzags. But even if it zigzags, the candles have a story to tell you. I'm gonna just keep practicing and see how it really plays out, but I just wanted to show you that and just keep the consistency rolling. So another thing I think it would be good to discuss is this FTX and Binance thing. If you even still care about crypto, I still care about crypto, but I've grown to be like more understanding of what's causing it to move. Like, to me, and then this is just my idea, and you can deny it, you can give me a different point of view, but it's as basic as this, right? It's as simple as interest rates, right? Interest rates, if interest rates are low, investors tend to get more risk on. If interest rates are high, investors tend to go more risk off and go for more stable assets that can give you a guaranteed return, versus assets that their profitability might come into question if the money starts to get a lot more expensive. So things like risky stocks or risky house, risky investments, like probably cars, loans, etc., those become a lot more expensive when interest rates are high. But when interest rates are low, things like that become like it doesn't really affect you to get into certain forms of risk. So if you have like a 1% loan and you're paying $100 on a car that you don't need, $100 a month, it doesn't seem like a big risk. But if you have a 7% interest, right, and then you're paying like $1,000 a month on a car that you don't need, that is a risk that can end you up bankrupt. That immediately becomes a situation where you're like, okay, I don't want to take on this amount of risk. It's not worth it at this time for me. The money isn't that easy to get, so why would I go and risk it in something? So basically, I don't see crypto or anything else go. I don't see anything speculative going up unless interest rates pause, pivot, or are cut to zero. Basically, right? So when it comes to crypto, like I see that a lot of these things are genuine Ponzi schemes, like genuine ass Ponzi schemes. All of this shit that you see, the only thing I think is not a Ponzi scheme, literally, is Bitcoin. But like everything else, straight up Ponzi scheme. Like how that's how it works. Like I've seen it. I've lost money when like an exchange go default because they've been over leveraged. So seeing something just like this that is happening to FTX, and I'm telling like a friend, say, hey, maybe you should get your money out of the platform, and he's asking me if he's repeating the question back to me. I'm like, this happened to me. There's a reason why I'm warning you, but let's just see. All right. So basically, from the previous video, as you can see, FTX, if you know that exchange, FTX, right? It's a crypto exchange. You know, all of the big guys were like um supporting this. Tom Brady, they bought FTX Stadium, and they had the CEO Sam Bankman-Fried. I never trust him from morning. I didn't trust that guy. Honestly, I did not trust that guy. Like something was just sus about him. Just seemed like a fed to me, honestly. But um, basically, FTX, one of their top investors was exposing the balance sheet, and then they showed most of their holdings were just in some crypto coins that didn't seem to have any value. They didn't really have any value. It's like they made up, they made the coin, they attributed a value to it. Nobody was buying it, nobody was selling it. And then on their balance sheet, it's just made up of this coin. So any huge selling pressure they got, you could literally move the market. If someone was decided to sell 300 million worth of this coin, that would add some, like you could visually see the selling pressure. And then what that seemed to cause is like a cascading sell. So you have Binance trying to sell, and then other people trying to get ahead of Binance and sell as well. And then that just has a cascading effect. Cascading effect, right? So yesterday, Binance announced that they were going to support them and then buy FTX. But today, it seems like Binance came to a decision, say, hey, it doesn't make sense for us to buy this. So basically, this is a tweet from Binance. And this is why you should love Twitter. You can have companies giving you the news directly. You don't have to wait on a news outlet or anything like that. You have literally the company tweeting out fact. So pay attention to this. Use Twitter wisely, guys. I love Twitter, honestly. So Binance tweeted out, as a result of corporate due diligence, meaning their it's in their best interest to not take up any risk because of their investors. So as a business, it wouldn't make any sense for Binance to buy this company, knowing that this company is going to shit. Like, even if you want to help someone, and you shouldn't even help them. Why? Because that person was literally lobbying against them. That person was lobbying against them, and then Binance. That was a reason why Binance decided, okay, you're lobbying against me. I don't think I want to have anything to do with you. Maybe I should get rid of these coins. I'm gonna sell it about the coins, and then that added some selling pressure. There's also another story about what was it? There was a story about Binance's CEO. Here he is, CZ Binance, seeing the books of the company and was like, no, this doesn't make any sense, right? So basically, as a result of corporate due diligence, as well as the latest news reports regarding mishandled customer funds and alleged U.S. agency investigations, we have decided that we will not pursue the potential acquisition of FTX. So basically, it seems like FTX is going to default. You've heard me speak about Celsius before on this channel. I used to use Celsius and I could put up Bitcoin or put up USDC and then borrow against that. That was going good. That was going good until Bitcoin started to fall. When Bitcoin started to fall drastically, and then Celsius started to hold up withdrawals, and then now you can't withdraw your money. My money was just locked up. And then while you're signing in the terms and agreements, all of that stuff, they were like, if we were to default, every coin that is in this exchange belongs to us, and we will use that to go towards paying off any debt or paying off investors. So it looks like it's exactly something like this that is happening. And then you see Binance is not supporting them, right? How does this even affect the broader crypto market? So Binance isn't supporting them, and then we see Bitcoin here. I was thinking Bitcoin was taking a hit, but it's not really. Wait, hold on. So, yeah, because that previous chart said 16, right? This is saying 14. Is this right? It's saying 16. Damn, Bitcoin is down. But basically, if Binance isn't going to support them, that's going to lead to people trying to sell to cover their positions. What are they going to sell? They're gonna sell probably more stable coins that they have, or any coins, just to get the liquidity. They're gonna sell USDC, ETH, Bitcoin. They're just gonna sell things to try to recover the margin. But that's basically what's happening. Let me see what else. I had a list, and okay. So I wanted to talk about the crypto, my beliefs. I mean, I'm gonna do a video more in depth on that, and I will talk more about that, like crypto, speculative assets, when to buy, stuff like that. I mean, I'm not rich yet, but I spend a lot of my time trying to wrap my head around this and to have a great understanding of what's going on, and I think I'm getting there. Like, as much as people might say, oh, you can't predict it, you can't do this, you can't do that, some people predict it, and I think I am getting closer just the more time I take on it. Just a little portion. I don't know if you're even gonna be watching it so long. It's at 24 minutes now, but not financial advice, but essentially, in this environment, think about it, tell me if my reasoning is right or wrong. But now might be the time to buy stocks. Why? Companies are cutting costs and trying to become as lean as profitable, and then try to become as lean as possible, and trying to become more profitable for the cheaper price that they are at now. So basically, companies are getting very lean. They're cutting employees, cutting expenses. Why? The money is harder. The money is more expensive now that they're working with, right? So if the money is more expensive and the company is cutting back, the company is just working lean, still making money, still getting profitable, right? And then it's at a cheaper price. Imagine whenever there's a pivot, I'm not sure how the cycle works, and then whenever there's a pivot and the money becomes extremely free, those companies tend to get extremely profitable or seem highly valued. So that's what I'm expecting to happen whenever that pivot seems to come, and you can either buy the stocks or just learn to trade like me, and then we just learn to trade with me or like me, and then we can make money from that entire upside. But believe me, that's not going to miss us once we're following it up, you know? And then a next video I'm looking at, and you're probably gonna like this, we're gonna do a Tesla comparison, right? Gonna compare like all the EVs. So compare Tesla, Ford, GM, Polestar, Neo, Xpeng, Li Auto, Mullen, Lucid, Rivian. And the thing about it, I'm not comparing looks. I want to compare like which company is making the most EVs, which company has the most profit, which company has the highest market share, which company has is like vertically integrated. They have most of their parts in the line, all of that stuff. But basically, that's it. Thanks for watching the video. If you even went this far, like, I really respect you. Thank you. And use the link in my caption or bio or whatever, just down below. Just click it. There's no links in there right now, but just fuck with it, you know what I mean? All right, I'll see you later and see you tomorrow. Bye.